Stocks stay subdued today over tensions in West Asia and the dimming prospects of a Fed rate cut after retail sales in US come in stronger than expected. IT and financials are the big drags, even as pharma and FMCG eke out gains.
All right, let's also talk about the LTI Mindtree. The stock has slid after two global sales executive departs. The exit follows a spate of others since October last year, adding to already heightened concerns on this count.
After announcing a partnership for a digital-first asset management venture in July last year, Jio and BlackRock have agreed to form another 50-50 joint venture for wealth management in India, with further plans to set up a brokerage. The stock rallies on the news.
All right, Aditya Birla Capital launches a D2C omni-channel platform, Aditya Birla Capital Digital, with an aim to help AB Capital augment digital services and emerge as a financial service provider, says Chairman Kumar Bangalam Birla. The group will also launch its jewelry retail business with an initial capital of around 5,000 odd crore rupees in a few months.
Indian Met Department tells CNBC-TV18 that the monsoon this year is not only likely to be above average, but also well distributed, fueling hopes of a rural demand revival. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me is my co-anchor, Nikki. Hi, Nikki. So the subdued market really continues because of the geopolitical tension, and that is a big worry for the global markets. Let's take stock of the markets at lunch hour today. And remember, it's a truncated week, so tomorrow is a market holiday, and that is also impacting at least some bit of volumes there. Now, Nifty 50 at 22,100 level, and has lost 160 odd points, down 0.7% in trade, and it is closer to the lower point of the trading session at the moment. Sensex too has lost over 600 points in trade. Bank Nifty is in line with the key indices in terms of its momentum, 0.7% down, and it's the mid-cap universe which is showing a lot more resilience compared to the key indices today, because the mid caps are just about flat and still but in the red, with a red negative bias. But the mid cap universe really participating well, and it has really seen a little bit of a fall only in the last hour of trade. Now, advance decline ratio, that is in favor of the advances because of the broader market participation, and the ratio is more than one stock gaining compared to the declines. But when we look at the Nifty 50 components picture and some of the IT counters, they are the ones which are the biggest drag in terms of percentage. Infosys is the one which is the biggest dragger, over 3% down on that bellwether in the IT sector. When I look at the gainers, there are quite a few gainers today in trade, but some of them are very marginal. But Eicher Motors, ONGC with the crude impact, second day on the trot, and Divi's Lab, Titan, as well as BPCL, Hindustan Unilever. These are some of the counters which are in the green. So, Nikki, subdued market, and of course, it's a truncated week as well.
Sure, I'm going to dwell more on Infosys, right? You've already highlighted that it's one of the top losers that we have on the Nifty 50 index. Of course, it's the shares have been down by as much as 6.7% year-to-date basis too. It's going to be reporting in the March quarter numbers on April 18th, so to keep an eye out for that one. HUL is another one which has snapped in the 4-day losing streak. It's trading in higher, but is still near that 52-week, or it's rather at that 52-week low. LIC has raised in the stake to over 5% on this one. Exide Industries, that's another one that you might want to keep a close eye out on. It's rallied as much as for third consecutive session. Nomura has maintained in that buy rating, and the target price has been maintained at 485. And a couple of things actually working in the favor of the company. As per the brokerage, it's essentially the alliance with global players, the government support, and EV traction. Namaraja has also surged in as much as 8.1% in trade today, the most in 19 weeks. And the trading volumes also seems to be a bit higher on that one. But let us begin business lunch by focusing on the big geopolitical story underway between Israel and Iran. Israel's Prime Minister Benjamin Netanyahu convened in his war cabinet for the second time since Iran's weekend war. The chief of Israel's defense force said that they would respond to Iran's drone and missile strike. Israelis allies, however, have been urging restraint and have declared that they will be a part of any retaliation against Iran. Now, CNBC's Richard Angel gets in the latest development right here for us.
48 hours after Iran attacked Israel with hundreds of drones and missiles, Israel is vowing to strike back. An Israeli official telling NBC News a response could be imminent. While touring a base that was lightly damaged, the only known damage in Israel, the chief of staff of the Israeli army said,
Iran will face the consequences for its actions. We will choose our response accordingly.
That announcement came after Prime Minister Benjamin Netanyahu held a second war cabinet meeting in 2 days. Throughout his career, Netanyahu has advocated for a tough approach against Iran, including military action. And this is a pivotal moment for him. A senior Israeli official telling NBC News that the cabinet agreed that a military response is needed to show deterrence, but that it should avoid provoking a regional war and be coordinated with the United States. Easier said than done. Israel is promising to respond, even though President Biden told Netanyahu not to escalate further, because with U.S. help, Israel shot down 99% of Iran's missiles and drones. The U.S. even led a hastily organized coalition to defend Israel that included Jordan and the U.K. The day before Iran's attack, President Biden warned Iran not to strike.
President, what is your message to Iran in this moment?
Don't.
But Iran isn't listening either. Soon after, the Iranian drones and missiles were heading toward Israel. We watched as Israeli missile defense systems were in action over Jerusalem's Old City, holy for billions of Jews, Christians, and Muslims.
For the last several minutes, we've seen these flares streaking all across the skies over Jerusalem. And now, for the first time, we're hearing the air raid sirens.
The Pentagon says it shot down around 100 of the drones and missiles. Iran says it's done, that the barrage was its only response to Israel's deadly airstrike on Iran's embassy compound in Syria. But Iran warned that any Israeli reprisal would be met by an immediate counterstrike. There are fears that the long-running shadow war between Iran and Israel is breaking out into the open, with the United States right in the middle of it.
All right, so that bit has escalated further. So there are tensions and the geopolitical scenarios impacting not just our market, but markets globally. So as investors across the globe really continue to watch Israel's potential strike against Iran, well, markets across Asia Pacific fell across the board, with the South Korean Kospi, Taiwan Index and Hang Seng leading the losses. Now, the Japanese Nikkei, in fact, fell to a one-month low, while the Japanese yen fell to its lowest level since 1990 against the US dollar. Now, Wall Street futures, they continue to trade with losses after a weak session of trade on Monday, and the rising yields pressured the equities, with the US 10-year Treasury yield topped 4.6, while the US dollar surged to 106. Now, the highest level that we have seen since November. So that's the impact of this geopolitical tension on various pockets of global market, Nikki.
Yeah, but that's not it, right? The commodity most sensitive to geopolitical is crude oil. And Manisha joins in to talk just about that. Manisha, what is happening in the world of crude?
Those were some visuals that we were watching right now, and with the kind of statements that Israel is putting out, the markets would want to see some more action onto that. As of now, this is just confirmation and statements for that matter. We do know that Iran produces nearly 3 million barrels per day of crude oil, which is nearly 3% of global crude production as well. As of now, we understand that there are no supply disruptions or impact coming in. And also, when you look at the $90 barrel of a crude oil prices, the analysts would tell you that almost $4 to $6 is the war premium premium already built into the markets here. Otherwise, we would have been at 84 or 85 with the kind of supplies that there are in the market right now, with the kind of spare capacity that OPEC is holding because of those production cuts. Remember, they can bring it back any point in time if the crude prices surges to the north of 95 or towards 100 there. So the markets are quite confident and settled right now. Even the US crude production is near all-time highs. So we have $4 to $5 of a war premium already built into these prices. The street will watch out for what Iran and Israel do from here on and the kind of statements as well. Remember, crude prices react more to sentiments much before than what happens on ground as of now. The street is also looking at stronger China GDP numbers is the reason that you have seen prices almost inching back to that 91 level. As far as this quarter is concerned, the Wall Street banks and brokerages believe that we are working anywhere between half to 1 million barrels per day of a deficit with the kind of production cuts that we are seeing from various OPEC countries. Russia oil facilities are almost 15% out of action because of Ukraine drone attacks as well. Markets are looking at a range anywhere between $90 to $98 on the higher side for this quarter. Buying on all dips is the strategy that has been coming in from a Citi and a Goldman Sachs and Bank of America as well.
All right. Thanks so much, Manisha, for getting us all those important details about the crude movement. It's time for a short breather on Business Lunch. But coming up on the other side, government comes out in support of Vodafone Idea's upcoming fundraising plan, a mammoth fundraising plan. More on that on the other side. Stay tuned.
You're watching Business Lunch on CNBC-TV18. Well, let's talk about Baba Ramdev. It's appeared in the Supreme Court earlier today in the misleading ads case where he said that he's willing to tender in a public apology. Ramdev, alongside Patanjali Ayurved Managing Director Balakrishna, proposed to take in unilateral steps to redeem themselves and requested a week's time to do the same. Ashmit here is joining us with all the details.
Well, this was the third time that Baba Ramdev appeared in person before the top court, and the Supreme Court didn't quite make it easy. The Supreme Court asked some tough questions. Baba Ramdev addressed himself the apex court. He addressed in Hindi where he said that Ayurveda was called a pseudoscience, and it was in a fit of rage that he launched the campaign that he did against allopathic medicine, that he has no grounds against allopathic medicine, that he's not trying to impinge on the majesty of the court, he's not trying to violate the court orders, that this is a mistake that they did, that they gave an assurance that they will not repeat this mistake once again, will be more mindful with respect to their conduct. And also importantly, through their lawyer, Mukul Rohatgi, submitted before the top court that they are even willing to submit a public apology. What shape and form that takes, it could be in the form of a newspaper. That is something that the lawyers were hinting at. So a public apology could be in the works. That's coming from Baba Ramdev. The apex court, however, was not fully convinced. The Supreme Court observed that Baba Ramdev is not as innocent as he's trying to make it out to be. The Supreme Court observed that after the apex court had passed the order, Baba Ramdev was bold enough to do a press conference, in fact, chastising the apex court orders. In fact, the Supreme Court observed that the only reason this apology is coming from Baba Ramdev is because Baba Ramdev has his back against the wall in light of these contempt proceedings here. And at this point, the apex court was mindful to point out that they're still not convinced about accepting the apology and that Baba Ramdev is not off the hook yet. So ominous words those coming in from the apex court for Baba Ramdev. For now though, the apex court has paused on passing any contempt orders against him, has allowed him this week's time. April 23rd is when the apex court will resume hearing in this case again, and that's when we'll get more clarity whether a public apology is issued, whether that public apology manages to convince the apex court, and whether or not the apex court will think of taking any adversarial action against Baba Ramdev. Back to you.
All right, Ashmit, thanks so much for getting us all the details from the courtroom action there. Now, moving on, there's just days to go for the first phase of polling in 2024 Lok Sabha elections. And Tamil Nadu is one of the states that will kick off the electoral process. For the state, The Coimbatore constituency is proving to be a key battleground for the DMK, AIA-DMK and the BJP. As part of our ongoing series, we focus on that in Election Exchange. So CNBC-TV18's Jude Sanith travelled to Coimbatore. He reports that in this industrial town, economic revival is the key talking point, and that's something every party has picked up on.
In Coimbatore, there's anticipation in the air as BJP supporters wait for their candidate to arrive. Annamalai Kuppuswamy is not only the BJP's Tamil Nadu president, he is widely recognized as an important part of the party's future leadership. For now, he is also the BJP's Coimbatore candidate, a recent stronghold after the Saffron Party won an assembly seat here in 2021. His focus, should he win, will be to do more than just return the industrial hub to its former glory. This includes plans to automate the town's foundries and organize its component units.
Most of the laborers are from North India. Slowly they are trying to move out naturally. Once UP and Bihar starts picking up manufacturing, they'll move out. So we got to automate the foundry. With respect to the automobile, we want to create an automobile cluster. Though you have automobile component manufacturers here and there, but there is no cluster approach for them. We want to do that.
This need to urgently repair the industrial aspect of Coimbatore is not lost on any party. The fight for Coimbatore, a three-cornered one, has moved from open ground to the town's foundries and component-making units. In their campaign speeches, candidates from across the political spectrum have laid emphasis on industry, growth, skilling and jobs. And these promises couldn't come at a more opportune time. MSME units and foundries in Coimbatore say the workforce is in desperate need of skilling.
China, they have 60 training institutes for the foundry alone. In India, not even one industry. I think from the Coimbatore foundries, we are planning a one institute. So we are expecting some support from the central government, new government, and also the local government to put up a foundry training institute.
While raw material inflation has hit component makers, foundries say the centre's recent updated list of quality control orders or QCOs, initially meant to keep a check on substandard imports, is hurting local production.
We think that the QCO should cover the finished product and not the raw material products. For us, it will be good to have a strong candidate who can take the interests of our community, that is the MSME manufacturing community, and make our voices heard in the national level.
To be very fair, Annamalai, if elected, yes, naturally, if the centre has a BJP government, it is really going to help Coimbatore. All I would say is, in fact, Coimbatore needs accelerated growth.
Skilling challenges and QCO regulations aside, Coimbatore Inc. also wants the new government to attract big-ticket investments from a major OEM to give MSMEs a boost. On its part, the textile industry wants a PLI scheme of its own that it has been waiting on for several months now. Back on the poll turf, 36-year-old IIM-A alumnus Singay Ramachandran is a first-time candidate contesting on an AIA-DMK ticket. And while industry is his focus too, Ramachandran claims lofty promises don't count for much if basics like escalating power prices aren't kept in check.
Many textile industries. So all these industries are suffering because of the EB price hike that has been pushed from the DMK side. And they are saying they are not able to run it as they used to run earlier. Primarily, we should make sure that the native business survive. Because you cannot go and ask a mill worker or a lathe workshop person or a person who is working in a foundry to go and do Python or Java coding.
The battle for Coimbatore has hit fever pitch, and it's clear that every candidate knows the industry-centric vote bank holds the key to the constituency. In the 2019 elections, the CPIM won this constituency. Today, the party is letting its stronger and more industry-friendly ally, the DMK, field a candidate of its own. Meanwhile, Annamalai wants to get the constituency back with the BJP after a gap of 20 years. In Coimbatore, Jude Sanath.
Well, that was the election exchange for you, but let's slip into a short break. More news and update to follow on the other side. Stay tuned.
Welcome back. You're watching Business Lunch. Now, in an important news development and very topical at this point, government comes out in support of Vodafone Idea's upcoming fundraising plan. Says that preserving competition with multiple operators in the market, in the telecom market, is a major policy goal of the government. In fact, my colleague Sapna Das gets us more details on this. Tell us, Sapna.
Absolutely. None other than the Finance Secretary, Mr. T.V. Somnathan, has come out with this statement very clearly indicating the government support behind Vodafone Idea's upcoming FPO of around 18,000 crores. Well, the government's take is pretty much clear over here that they want to preserve competition, and that basically is an important policy goal for them because it also serves the larger interest of consumers. Very clearly, just two major operators in the market now. Third operator Vodafone almost getting kind of sidelined or pushed out of the market is not something that the government is very happy about. So as of now, they're completely behind this decision taken by Vodafone to come out with this massive fundraising program. And of course, the government's stake will get diluted over a period of time as and how the FPO proceeds. So this support is very much in terms of what is the policy thinking within the government. Here again, they are pretty all right with the capital investment plans announced by the company, and they're also saying that it was to maintain this kind of spirit that way back in 2021 the government had come out with a telecom package, and this massive capital infusion in BSNL had also happened. Now let's keep in mind, however, that even in the financial year gone by, the BSNL losses have actually gone up. But government clearly sticking to the fact that they're not happy only with two telecom operators in the market, and hence full support behind the upcoming Vodafone FPO.
All right, that's all that we have in Business Lunch. But coming up next is Mid Cap Radar.